Hello, everybody. My name's Enrique, and this is.
Linda.
And today we're going to be talking about things to consider when purchasing a home in 2024. But first, honey, let's do a podcast. Hello, everyone, and welcome back to Honey, Let's Do a Podcast. I'm your host, Enrique, and this is my lovely co host.
Linda.
And today, like we said at the beginning, we're going to be talking to you about things to consider when purchasing a house in 2024. We went through this whole process in 2017 when we purchased our current home. At that time, we didn't know anything about it. We did research a little bit because, we were first home buyers, and I think everybody has to go through their due diligence of, you know, kind of like getting information on what you're going to get yourself into and what should be the best thing. Again, this changes based on everybody because everybody has they're in different situations economically at the time that they're going to purchase. So it's going to vary depending on what you're in right now. And then some loans are going to be better for you. For example, when we're talking about purchasing loans, some are going to be better for you, some are going to be better for us. It all depends, right? However, we're going to be covering what our experience was, how difficult it is to do it at this time, because again, we talked about, there was a video 2 or 3 videos ago, I forgot the number, but we talked about the inflation and how it's been going up ever since the pandemic, and it's kind of like steadying itself down a little bit, but everything's gotten really high, and it just skyrocketed, and it's also affected the mortgage or the house buying
Housing.
market. So at this point, it is way more difficult than when we bought it in 2017 before the pandemic. So, but we do want to give you guys information a little bit on what to do and things you can do, obviously, to kind of make the process easier and give you a little bit of insight on the mortgages and things that are at your disposal right now, and maybe make you make a better decision about this. So I think before we start and before we give our story on what we went through or what we ended up doing, let's talk a little bit about the different loans and the different loans that you can right now in the market that you can search for that are going to be the options you're going to have to maybe get into a house.
Yeah.
And I think Linda wanted to start with this, so Linda, just take it away.
Yeah. So there are different type of loans. The first one is most well known is called conventional loan. And inside conventional loans, there are two type of loans. There are the conforming loans and there are the non-conforming loans. Mostly, we are going to talk about the conforming loans because the non-conforming loans have different guidelines, and it might apply for people that are going to have like higher loans, or other type of loans specifically. So, Enrique.
Yeah, so what we're going to talk about is the one that most people actually home buyers are going to get themselves into. Like there's other types of the unconforming, but that's more like if you're going to have real estate or there's other type of things,
Yes.
but that's not going to be most people. Most people are just going to buy a house to live in, right?
Yeah.
And so for that case, the most normal or the one most people know is conventional mortgages. That's the first one we're going to talk about in the conforming one. So that most people talk about conventional mortgages. And what happens here is that this one, for example, you're going to need a minimum credit score around 620 or a DTI, which is a debt to income ratio around 50%. Okay. And this one, it's really popular. It's one of the most common used if you're not going with the government loans. And this one you can get to a minimum I think as little as down payment as 3% if you're like a first home buyer. And if you already own a home, I think it's around 5% down to put. One of the things with this one is that there's the mortgage insurance, or they call the PMI, or I think was that private mortgage insurance. Yeah, I think that's what it's called. And you do need this one. You do need to pay it unless you're giving 20. So if you give 20% down payment out front, you don't need to pay the PMI, right? Which is we're going to talk about this when we get to the government loans, but that's actually a thing that I think it's actually better than the government loans. Like, for example, the FHA, because in that one, you actually have to pay it no matter what throughout the whole, the whole life of the loan. But in this one, once you get either you pay the 20% down payment up front and you don't have to pay any, private mortgage insurance or the PMI, or if not, you don't put the 20%, you just have to purchase or get a private mortgage insurance. But once you get to that 20% of the house paid, you don't have to pay it anymore. So basically, you're not going to have to pay this. Let's say, I don't know, you take a 20, 25-year loan, you might not have to pay it 25 years because you're probably going to 20% way before that, right? So that's one thing you're going to have to stop paying. So I think that's actually a positive and then a con for this type of loan and compared to the government loans. Um, but anyway, I think it's a great choice uh, for most home buyers who want lower interest rates and not have to put a big down payment, right? Um, I don't know. What do you have anything to say about this loan? I mean, I don't-
No, I think you actually cover most of the information that is stated about conventional loans.
so for example, what could be one negative about it? I think the one negative, for example, is that you do need a little bit higher credit score than, for example, if you go with an FHA loan or a government loan. I think government loans they even allow you to go lower credit
Yeah,
score.
and some
And
of
I
them don't
think and
even
I think even
check
a
your
lower
credit.
DTI, which is a debt to income ratio, it's not as high.
It's and it's a little bit more strict than government loans, but it's still
But a lot of times it is recommended. For example, I'm gonna be upfront. We didn't take this one because at the time we couldn't like it was harder for us.
yeah.
This one than the so we went with the FHA, which is that's like
And
the most commonly used
and the
of the
conventional
government.
loan is
Yeah,
also the one that is given by the banks.
yeah, it is given by the
It's
banks.
not by the
It's not
government.
by the
So it's
government. You're right.
just it's usually done by the bank. And if the bank doesn't want to approve because they also have their own regulations and they also have their own guidelines and their own requirements of it, then you might not even qualify for that one. And I remember in our case particularly, we didn't qualify for that one at the beginning, and we actually had to take a different route.
I don't know. I think the other ones that I know are the fixed ratio mortgage and the adjustable ratio mortgage, which is the ARMs. But those we're not really we didn't really want to talk about it because I don't think. Well, you if you interested in that, if you're gonna get into real estate and other stuff like that, you're gonna have to look into these things. But we're
Yes.
not really gonna. I don't really want to talk about it because this is more of a subject about home buyers and how to deal with like what to do, like if you're gonna try to purchase a house, loans you're gonna get, and stuff like that. I don't really want to get into that one. Okay, now the other one that's really popular and a lot of people actually, I think. Do you think more people actually go for this than the conventional? In my opinion, like the government-backed loans. What do you think?
I think if they qualify, they can go for it. But I'm not sure if everybody will qualify for those options because there are other requirements for it.
Well, this one, the government-backed loans, are issued by the Federal Housing
Mm-hmm.
Administration, which is the FHA, the Veteran Affairs, which is the VA, and also the United States Department of Agriculture, which is the USDA.
Mm-hmm.
Okay, and then these are all backed by the government, so they got this procedural criteria you need to meet and to qualify, along with benefits. You will also be able to save on interest or down payment requirements depending on your availability. Okay, now let's talk first about FHA, and this is the loan that we actually got ourselves into. Like we said, this, like I said a little while ago, this was with the Federal Housing Administration, and it kind of allow you to buy a home with a much lower credit or lower credit
Lower
than the
credit score.
conventional mortgage. So this one's around you can actually get to around 580 of the credit
Mm-hmm.
score
Yes.
and a down payment of around 3.5%. Uh, so obviously, if you're struggling with your credit, if you have a little more debt, like we talked a little while ago, this is probably an easier loan for you to get yourself into. And I actually think
I think in our case was actually because we didn't have enough history.
no, I didn't have like we're gonna talk about this later, but I was a ghost. I had no credit history because when I was studying in college and all this, normally people get like a credit card like Macy's or whatever it is. I never got into credit cards or anything, so I basically had no credit. So when we went to do this, we're like, "Who this guy?" I mean, like, Linda was
Yeah.
fine. Everything checked cool. With me, it was like, well,
I have a
it was
very
also it was
high.
also my job. I was doing my job is commission based, and at the time I needed 2 years of commission based job, and I only had 1 year, so it was a little bit difficult also because of that. So we had to do some workaround and stuff, but that was another thing. What were you gonna say?
Honestly, I lost my thought, to be honest.
No, you don't remember?
No, but I think just continuing with the whole topic, another of the issues that you will encounter is that you need to have insurance during the whole period of time of that FHA loan.
Mm-hmm.
So that's something that you need to account, because it's not like the conventional loan that you will have that 20% down. I mean, sorry, that 20%, once you pay 20%, or yeah, you get that to that 20% mark of the loan, the down payment, not the down payment, the principal
Yes.
of the house, then you can eliminate the insurance. But with the FHA, you have to have the insurance all the way until the end, until it's completely paid off. And that, I mean, can be a problem.
Yeah, I touched upon that when back when I was talking about conventional loans. But yeah, so you have like she said, you have to pay the mortgage, which is included in your down payment, in your monthly payment in the FHA. It's for the whole like lifespan of the loan. In the conventional loan, once you get to that 20% paid of the house, don't have to pay that anymore.
Other thing that the FHA has is that it doesn't allow you because it's riskier for them. They don't allow you to have very high loans. So they cap you, and that cap is lower than a conventional loan. So that's something to consider. Luckily, our house was not that expensive back
Well,
then.
there's a different loan for, like, I think it's called a jumbo loan
The
or
jumbo
something.
loan, yeah.
That's for like if you have a almost $1 million or $2 million
Yes.
house or whatever.
Yes.
For those that are really expensive, you there's a different loan. But
Yeah.
obviously, that's not our case either. But if you're in that bracket, then I think you probably have to
Yeah.
get one of those loans. I mean, again, that's why we're saying that everything depends on what you like. For example, if you can make your down payment, I'm sorry, your monthly payment with the increase, with the mortgage in it, I mean, or the interest in it, and your mortgage and everything that's included, the interest, the monthly payment of the house. If you can make that payment, FHA is a great loan, right?
Yeah.
It's a great loan. It's like, that's like I said, it's one of the probably the most popular one used in the U.S. probably in terms of the average or the general population. Conventional is right there with it, but again, I think conventional, it's a little more. You can get into a little bit of higher percentage. Like you're probably like FHA is always 3.5% or around there, interest like or down payment. So it's easier. Like the conventional varies depending, like I said, if you're first time, if you already had a home. So usually you're probably gonna have to put a little more down payment in the conventional loan than the FHA. And I think uh, this is the only part I'm not sure about. Right? I think that you can get a higher like a higher, how do you call it, like a longer rate or a longer lifespan of the rate with an FHA than a conventional. I think. I'm not
You're
sure.
talking the
Like
the
like
length
30
the
years,
length
25
of the
years,
house
whatever.
of
I think
of
so.
the loan.
I think so. I'm not sure,
I'm not sure, to be honest.
but I believe, because I remember when we were gonna buy the house, we're looking at loans. I think that's one of the things that we ended up with the FHA too, because we could go longer and also lower the monthly, because obviously it's distributed in a longer period of time, so the monthly goes
But you're
lower.
also paying more
Yeah, you
interest.
pay more interest, but again, it all depends on what monthly you can pay at that time.
Yeah.
If you can't pay it, but you want the house, you know, you got to choose a loan,
Yeah.
right? Anyway, so we talk about the FHA. That's one of the governmental loans, again, by the Federal Housing Administration. The other one we talked about was the USDA. This is kind of like, it's
This
less people are going to use it, but this is more like in
Yes,
the
it's
rural
a rare.
areas or
Yeah.
suburban area, or like more like in the outside areas, not like in city areas. And for example, you have to meet certain criterias. But this one, you can go as to zero down payment. Like you don't have to put any down payment on this. And again, you have to qualify to a certain things for this loan. Again, I'm not going to talk about this one that much because, frankly, we wasn't our case, and it's probably not the majority of people that are going to be looking for an USDA loan.
Now you also have the VA loans. The VA loans are by the Department of Veterans Affairs, and this is usually a loan that is given to U.S. military people, like for example, active people that are in the active duty, that are veterans, National Guard, or they are part of the reserve. And these are great loans because they don't even need to have a down payment. They can have a 1.5% to 3.5% of closing. It's just you have a lot of advantages, and they don't even check your score, your credit score. So it's just a great loan. Obviously, it's not for everybody. It is specifically for military. So if you or their spouses, so it's either the person that is in the act in the military in either of the options, or if it's a spouse, so they also qualify as well. So if you know somebody that is involved in that and they want to buy a house, that's definitely a choice that they want to look because it has great benefits.
Yes, and like Linda was saying, has the lowest interest rates than most other types of loans in general. Like who can like let's say out like who home buyers who can benefit from these government loans. So, for example, buyers who have low cash savings, uh, they can benefit from government-backed loans, and also buyers with a lower credit are going to benefit from a government backed loans. Okay, and I think, do you have any other mortgages? Because I think those are the main,
I think those are
the
the main,
government
to be
loans, and then
honest.
the conventional mortgage are like the main two that I want to talk about. And in general, really,
I think in the housing
yeah,
area, those are the ones that you want to take a look at. Probably there are a few more out there. Very rare that people will use it, but for most people, the vast majority, I will say those are the ones that they should look at it.
yeah. And obviously, if you're doing conventional, then you gotta check with your bank where you're gonna
Hmm.
get, better interest rate and all that stuff. Better, so those are things to consider. So Linda, so what has been going on lately in the market and like in the home buyer market and stuff like that? Because I know you work in the field, you work in that field. So what's been the trending thing? With inflation, are the prices going up on the houses? Are the prices going down? Because I know we reached like a low point right after the pandemic. The houses dropped a lot, and
Yeah.
everybody was like buying houses because the APR was low and everything was low, and people were like going crazy buying houses. But I know at this current time,
Hmm.
late 2023, early 2024, what are we dealing with right now?
Yeah, we're not getting anything better. This is just going up and up. To be honest, my experience in my everyday work is just that the houses keep rising in price, and it's not necessarily their fault. If the materials are more expensive, well, the house is going to be more expensive because the house is made with different materials. So the add of all of the materials, even if they try to reduce costs, what point it will make sense to reduce the cost, because then you're lowering the quality of that house. So it is a trade-off that you do in this type of business. So the trend is, though, I think by the 2019, 2020, the lumber, um, we built houses in the United States with lumber, most of them. And the lumber price jumps very, very high. And then other materials jump very, very high. Then all the cost now of the houses is just very expensive. Then at some point it decreased a little bit, and the houses were able to lower a little bit, but it pretty much like a domino effect at this point.
Yeah.
And unfortunately, at the end, the person that is going to buy the house is the one that is going to pay the price, because they are getting the final product at the end. So just to get a summary, I don't think, my personal experience, what I have seen in the market, I don't think it will go down, maybe a little bit,
So
but it will keep going up.
So what would be a recommendation for people? Would you tell people at this moment to hold on, to purchase?
No,
To,
I
what
will
is a
say,
what is a
I
what do they
was
should do?
I will say the exact same that we did 6 years ago. If you have the opportunity to buy your house, buy it, because the prices are just going to keep going up. Inflation will keep going up. And
But what when what about that? Well, like I said, right after the pandemic, I remember that The market went down.
Yeah, but that's a very rare situation. I don't
I
think
know,
that will
but
happen
wouldn't
again.
people think, oh, if it happened, it could happen again, or no?
I mean, that price was like
I know.
a
That's what I'm
one in
saying.
like 4 decades. It
Because
was
remember,
just a very
Paul,
rare situation.
our friend Paul, bought his around that time, so he got much better interest rates than we did.
Yes. And if you were able to jump in that boat, that's great. But that's just a
So
very
you just
rare
think it's probably
situation.
not gonna occur again,
No,
at least not
not,
right now,
no, I don't think that's going to happen again.
because this trend that you've been seeing
Yes.
in the market,
And
it's
that was a very, very rare situation that only happens like one in 2 or 3 decades. So
okay.
it's just not normal to go that low. It might happen once every 10 years, but it just happens. So you need to wait 10 more years. The price of the houses are going to keep increasing very, very high. So it's just not worth it.
Got it. Well, I guess we can piggyback now and kind of like talk about our situation. So now that Linda gave you that feedback, when we bought our house, we bought it like I said at the beginning in 2017, and you know, at that time the house prices were not that high. So the price of the house we're looking at right now, probably we would try to buy the same house at this time. It'll probably be close to 50% more, I would say, or maybe more. What do you think?
Maybe more.
Probably more
Yeah, probably more.
at this time that our same house. So obviously the price has gone up.
Double.
Um, and our interest rate at that time wasn't bad. I don't think it was awesome either,
No.
but it wasn't bad. It's much better than it is right now.
I think also our situation, our particular, we didn't have a lot of the things that most people have. We were new. We didn't have much history. You were a ghost.
Yeah, so it didn't help with the credit either.
Yeah, it didn't help. So that might affect our interest rate being higher than usual.
Yes,
So
because I remember that the lady we were working in with, which was a friend, had to do miracles
yes,
to get us approved for the loan with their bank. So this is actually a good thing to talk about, because if you have issues, like for example, it's almost like it was only Linda who was applying for the loan, because like I said, like she said, I was kind of like a ghost. Uh, didn't have any history, credit history. According to my job, even though I was making income to buy the house, I needed at least 2 years of working in commission job
hmm
before I could, that's the track record they needed, the bank needed to approve us. And obviously, I didn't check that mark. So the person who was doing the loan for us, and I think it helped that it was somebody we knew as a friend, but I don't know what she did. She did like workarounds or something, but it helped. So basically, what I'm trying to say is, if you're having situations where things are looking grim and you think I'm definitely not going to get approved to this, I don't even know what I'm trying, I would always say, try your best. Don't give up. Look, maybe reach out to somebody. Maybe somebody knows somebody who's working in the field. But just try it out, because based on everything, we shouldn't have gotten approved. We shouldn't even be in a house at least at that time. We probably would have
yeah,
gotten maybe in a year more. We would have been fine. But at least when we were trying to buy, for all the normal, the normal schematics and everything, we were not supposed to be approved.
yes.
That's basically it. So just you never know. Just do your due diligence. Check with people who work in the field. Ask ask banks, ask different banks, try different options. Et cetera, et cetera, et cetera. But you might, if that's your dream, then you still might get it, because we did, and everything was really going against us at that time.
And we were very new in the field. I mean, we bought our house just 2 years after moving here. So it was just, we were
All
very
right, it was
ahead.
2 years.
It
You're
was
right,
just 2 years after
because
we
we
moved.
only were in 2 apartments.
Mm-hmm.
Yeah.
Yeah. So we just moved very upfront. I think we made a great decision, even though back in the days when we purchased the house, we thought it was the worst decision. But I think now we did a good decision. Also, another thing that helped us was that when we purchased the house, our salary was not that great. Um, so we bought the house with taking that budget in consideration, or pretty much our low income consideration. We were not low income, but um, taking that in consideration. And now we obviously make more money, and it is easy to make all the payments because now we make more money and we still have the same house. And if we would have waited and purchased the house, we will not be able to purchase the house this size, because this is relatively a big house. It's not super big, but it's relatively
Yeah.
big.
But I would say that, the main thing that I think everybody needs to do, and this is going back to what to do, things to consider when buying a house during 2024, because the same thing we did in 2017 applies to this year, and I think
Mm-hmm.
it's going to apply to next year and the year
Yep.
after that and the
Yep.
year after that and the year after that. It's the same concept. Basically, is we knew what we wanted. Linda knew she wanted a house, so we started prepping up for it, right? So we were living in apartment complexes. There are apartment complexes that we got into were like really, how do you call it, low monthlies that we had to do. So we could have gone to a much fancier apartment complex, right? Where we probably would have to pay twice the amount we were paying on the current one we were living in. So we took a hit on that. We probably would have liked to be in a nicer apartment complex because we could have paid for it. We had the money to pay for a nicer apartment complex. But we said, no, you know what? Let's stay in this, and let's all that extra that we would have to pay to the other apartment complex, let's put it down. Let's save it. Let's save it. Let's put it in a savings or checkers or whatever you want to put it. Just save it, right? And because when you want to pay the house, when you want to get into the house, now you got a down payment. Now you got money for closing costs. You got money that you can make the move to the house because you saved up, right? And that's still, it's finance 101, right? It's still the same thing, and it applies for everything, not just buying a house, buying a car, making a travel trip, whatever it is. You need to plan for that, adjust your budgets, save money, and then make plan for whatever decision you want to make. Unless you're Elon Musk and you got a bunch of money, maybe you can buy whatever he wants, right? But if that's not your case, you're gonna have to adjust for it. And I think that applies now, regardless of the increasing cost, like inflation, whatever it is,
Mm-hmm.
because it sucks. Yeah, it's more than before, but the same rule applies. Maybe instead of a year like we did saving, maybe you need 2 years of saving before you can do it. But it's the same concept. Like you just have to plan ahead, plan for what you want, save money, adjust your lifestyle, your budget, whatever you're doing at that time, so you can have a goal in mind, and you know that in 2 years you're gonna reach that goal, and then you're gonna try to go for the house and do whatever you wanted to do for what you were saving.
Yeah, that is right. And I know it's kind of hard this day with all this flashy stuff and all the friends telling you, "Oh, let's go here, let's go there." But if you are truly committed and you are determined in what you really, really want, and if you really want that house, you do everything, whatever it takes to save to purchase that house.
And I think, like I said, that's really the what it comes down to, right?
Mm-hmm.
And regardless of your economic situation, that's what it's going to come down to. You're lower income. First of all, you might have to choose a different house than somebody with a higher income. That's a given, right? But still, even if you're choosing a lower house, you're going to still have to save for that house. If you're higher income and you want to fancy your house, you're going to have to save more for that house, even if you make more. If you're rich, you're rich. Probably you can just cash the money and boom, buy the house cash. That could be your case. That's fine, right? Maybe you're buying a house to rent it. Whatever it is, right? Everybody has their different, their, their difference in their situation economically. And that's fine, you know? But at the end of the day, it all comes down to the same thing. You have to budget, you have to finance, and you have to have a plan in sight of what you want to do. Now, obviously, if you have information on mortgages and you have a little bit of knowledge and on that field, on the home buyers field, maybe you're looking like Linda. Maybe she knows, okay, prices are going up, but hey, It looks like in like next year, it looks like there's going to be a dip in the market, how the way it's trending, because X, Y, and C,
No,
whatever. No,
that's usually is because of a big event, like
no,
you know.
but what I'm saying, maybe you can read these things. You're like, okay, let's hold on, because in a couple, in 6 months or 7 months, it looks like it's going to come down, and maybe it's a better moment to jump in it right now. I'm just saying that unless you know those stuff and you're searching and you're researching all that stuff, it's like almost like people who do stocks, right?
Predict, yeah.
They're always like checking on the market. Oh, when do I put money? When do I take the money off? You're a little more informative in the field.
Yes.
So maybe you can get yourself informative in the house market field to know which is the better time to jump on it. Or maybe you got somebody who works in real estate and they tell you, hey, right now this section here opened up and it's a great section. Houses are going at this amount. They're going like crazy. I would suggest if you want to get into a house, apply for this one, for this section, and then maybe you like the area, whatever. But just stay informative with it, because that's going to help you in making that transition easier in that purchase.
Yeah. Sounds like a good plan.
Yeah.
Also, something that you wanted to check when you were purchasing your house, if this is something that we did when we were looking for the house, we look for schools, we look for the nearest hospital, if there were good hospitals, parks, amenities, malls, pretty much all the things that surround us, just in case that we have to have are fortunate enough and work close to to
Yeah.
our homes, which that's kind of difficult these days. But if you're one of those lucky ones, or if even better, if you work from home, then you have your little bubble where everything is right there. A lot of things that drive the cost of the house, and especially when you're reselling, is the rating of the schools, the schools that your kids that you are assigned to go. So maybe you want to search for a really good school district. That way, you know that the value of your house
Yeah.
will keep increasing.
Because obviously, maybe you pay more to buy a house in that area because the school is good. So the price of your house is higher than the same price, the same house in a different area.
Mm-hmm.
Like, when you get these builder homes, they got the same model homes and they build them a section here and a section over there. And maybe section A, the prices are higher than section B, even though they're the same houses. They're not different. They're the same size, same house, everything, same model. The reason is because section A is in an area which has got better schools. It's more developed. There's more like some mall. There's some mall clothes. There's this, that, and so it's more people. It's more, how to call it. It attracts more people to live in the area. So prices are up. Maybe nobody lives in this area because it's deserted. It still haven't been developed yet, or the school system
But
is
that
worse.
might
It's got a
actually
worse
be a
school
good
system.
thing,
No,
because precisely of that, because it's undeveloped, the
so
value
the
of the
houses are
houses
housed,
are
but then it
still
might get
low.
then it might get developed, and
Which
then
is
it boom,
exactly
the
what
house
happened
booms.
to this neighborhood.
Yeah.
The houses were still built. The area was not completely developed. It's still not completely developed, and the house value keeps
Yeah,
increasing
and the
because of
house
it.
value has gone way up.
So that's actually a very good strategy when you are doing when you're purchasing a house, is to purchase in a location that is starting, and then you're buying with the lowest price, and then as the area
So
starts
then
getting
maybe it's
developed.
good for people to also look for information of places where new houses are going to be developed.
Yes, for sure,
And maybe
definitely.
once they know they're starting to go up for sale, maybe jump on that if
Yes,
you think it's a good
yes,
area.
yes,
Okay.
yes. That's definitely a good one, because and that's most of our homes are sold in. I am in the I'm an architect in the residential market, so I sell homes, or I work for a company that sells homes, and all of the places that we sell homes, most of them are either starting developing, or they are midway. It's not completely fully developed, so the houses increase value. So it's just really good business.
And that's why also you guys also know that when you guys are buying houses from builders, if you get into the house early when they're starting to develop the area, you see houses from the 300,000s. And then once most of the houses are sold and there's only like 6 units left or 10 units left, it says starting with the 400,000. So instead of starting from 300,000, it went $100,000 more,
Yes.
just because now the area is more developed. So then they know they can sell it higher. You know, the developer knows, oh no, we don't need to sell it. We can sell it higher now because we got more stuff in it. So basically, that's a great idea that Linda gave you guys. So just try to search for these newer areas of development, and maybe you guys get in there early, and then the area booms up, and then your house gains value. So you have a higher reselling value if you maybe want to move in the future, or you want to change houses, whatever it is. You know, then you can get more money back from because you had appreciation in the house.
Yeah.
Uh, but I think, right? I think that's mostly what we wanted to cover today, right? Do you have anything
Yeah.
else you want
Yeah.
to say?
Yeah, for sure. I think these days it's kind of hard because houses are very expensive. Just to have I will say the average value for housing,
The medium.
the medium,
Yeah.
yes. 2024, I will say is like at least in Texas because it varies per state as well. But I will say specifically in Houston, I'm gonna go very broad because even within Texas it varies. But I will say like in Houston, I will say it's around 500,000 the median housing, maybe a little bit lower. It's kind of hard to say, but I will say in the 500,000 range, or a little bit less, because the housing is getting very expensive.
Yeah.
Just to build and also to purchase. So and it's not going down. I don't think it's going down. It already happened. If you didn't jump on that boat, you lost it
And that was right. You can thank
to the pandemic.
Mr. COVID-19 for that
Yes.
dip.
Yes.
'Cause that's what happened.
Yes.
Just like other things happen with that.
Mm-hmm.
But I think that covers up today. I know we've been delaying this subject for a while. We did that Puerto Rico video before this one, and then we had the trip to Puerto Rico before when we first announced we were going to do this video. So it's been delayed a while now. But finally, we got to it, and we were able to talk to you guys a little bit about it. And I think it went well. So the next video we're going to do, we're going to keep it a secret. We're not going to tell you what we're doing. Just because things can vary and things can change from here to that day. So we don't want to keep it secret. We'll let you know when it comes, unless Linda knows. But you haven't talked to me about it, so I don't think you know.
I have an idea. I have a couple ideas, but
But you're not gonna shoot him out right now.
no, not right now.
Okay. So we would like to thank you guys, like always, for watching or listening or watching. If you're
On
hearing
YouTube?
this on YouTube, if you're listening to us, and again, like we always say, you can listen to us on Apple Podcast, Amazon, Spotify. Those are the three main ones, and I think we're in other places, but those are the three big ones that you can listen to us, or on YouTube, like I said, and you can watch us there too. So again, we would like to thank you guys for listening. Thank you guys for spending a little bit of time with us. We really enjoy. It's like our decompression time.
Yes, it is.
Linda, you want to say something or?
Yes, I think this was a very fun topic after all, even though we postponed it multiple times. But I think we cover a lot of good ideas. And if you're buying a house, please share it in the comments. If this video was very helpful for you, also share in the comments, because that way we know that you guys are actually listening to us and our information is being of value to you. So please leave a comment.
Yes, and that's in YouTube. But please also give us a 5-star review if you can, if you really like us on
It's free. Come on, guys.
on Apple Music or Apple Podcasts or whatever. Get us a review on the podcast wherever you listen to it. It'll help us out. And again, thank you guys for listening. Follow us on your favorite podcast feed. Follow us on Instagram. Follow us. Email. We always put the email down. You can reach us at honeyletsdoapodcast@gmail.com.
Mm-hmm.
We'll see you not next Wednesday. The other one, we changed it to every other Wednesday, just so you know. Have a great day. Have a great evening. If it's night, have a great night, depending on what time of day you're at. We will see you
on the
not
next
Wednesday,
video.
the other Wednesday. See you guys. Bye bye.
Bye.